Hey, this is Brian Evans with BT Web Group, and I am here on a good old-fashioned Zoom call with Johnathon Davis with jtdavisky.com. Johnathon, thanks for showing up. Thanks for being here. Tell us about yourself.
Thank you, Brian. Well, Brian, as you know, we're a full-service financial advisory firm, and we specialize in helping folks who are in a pre-retirement situation. They're not quite retired just yet for the most part, our clients, but we help them to position themselves with their 401k or their 403b and get it to a point where they are then able to transition the funds they've accumulated in the accumulation stage and then start thinking about decumulation when they are retired. And they got to depend on this money as a stream of income that's going to last for the rest of their lives, hopefully. And that's what we come in at.
Okay. So we're here because we have a bunch of clients, and you being one of our favorite clients, of course, but you already know that.
Of course.
We're in a tumultuous time with the coronavirus, right? So you being in the financial markets, what are you experiencing? What are you seeing? What are clients asking you? What advice are you giving? What's going to happen? I mean, I know you don't have a crystal ball, but what advice would you give right now?
Crystal ball is broken. It's in the shop this week, Brian, crystal ball. But, as far as the future, I've been doing this for a long period of time. Even though I don't have any wrinkles just yet, but doing this for 30 years, almost 30 years. So I've seen ups, I've seen downs. The quote of great James Taylor, I've seen fire, Brian, and I've seen rain. I remember Y2K. I remember, this is probably the third major downturn that I've seen in my 30-year career. And even with that, I've also studied from a historical standpoint other periods of great upheaval. And one thing I've learned, Brian, being in this business, is that, the people that make the most money, they live by a credo that says that, great fortunes are made when blood runs in the streets, even if some of that blood is your own. And by blood, I mean that euphemistically, I was obviously talking about capital, talking about money, and there are risks to be taken, but there are also great rewards to be gotten from those folks who are not afraid, to risk or to position themselves, with some of their capital in the marketplace right now.
So would you recommend this being a time to stay patient and just kind of ride it out? Or do you recommend any drastic shifts in how a portfolio might be held?
Brian, that would depend on the client's time horizon. For example, I just was late to our conference call. I apologize, but I was late to that because I had a client on the phone who was retiring this year. Now, clearly, if your time horizon is that short, you need to be in a much more conservative position than someone who has 5+ or 10+ years to go to retirement. So it depends on your individual situation, which is why it's so important that you do find someone that you trust and that you can build a relationship with that can give you advice and guidance specific to your own situation. Because I'm a big believer in not using a one-size-fits-all, shoe when it comes to trying to pigeonhole folks into, which retirement vehicle they should be in. It should be a mix of different types of vehicles or different types of investments based upon what that individual client's needs are.
Sure. How did you get involved in this, in doing financial services?
Financial services, well, right out of college, I first went to undergrad. I went to have a business degree. I went to law school for a while because my mom wanted me to be an attorney. And I went to law school and realized I didn't want to be an attorney. But I did like business. I did like working with people. I liked money, and I love the idea of also working on Wall Street. So I worked for a little tiny Wall Street-based investment firm for the first 9 years of my investment. Learned a lot. The only thing that I guess turned me off from working with a Wall Street-based firm, especially back in the olden days, before we did true financial planning, was that it was really much more of a sale-based environment. Today, most financial advisors, the good ones anyway, it's a more consultative, environment, in that we become a trusted advisor, to a corporation or to a family. But back in the old days, it was mostly just kind of sell, buy. And I was good at it, but it didn't scratch the itch for me. I really enjoyed the aspect of working with a client, working with a family or a small business, and trying to figure out, what pieces fit together to make their lives whole, and also to make sure that when they decided to one day not to have to work, that they could be in a position to not do that.
Sure. Now, you played ball at UK as well, didn't you?
Long time ago.
Long time ago. All right, cool. I bet that was fun.
It was a lot of fun.
I bet it was. So what, I guess I know not all clients fit in the same mold. But if there was a mold, and if there was one or two, three pieces of advice, what would those be to maybe the broad consumer?
I guess the broad-based advice, the broad-based consumer, Brian, is that over time, you're going to be okay when it comes to a downturn in the market. That's one piece of advice. Number two is not to confuse volatility, with risk, because they're not the same thing. The amount of risk you take is not contingent, or it's not tied to the amount of volatility that's in the market. As a matter of fact, times like these when the market is very volatile, if you have a long-term horizon, if you're going to be in the market for 5 years or more, when the markets are very volatile and prices are reduced like they are right now, think of it like going to the grocery store and buying all your favorite things on sale. Volatility is your friend if you have a long time horizon. So you should be buying. And when I leave the client, more to that.
So this is the
Volatility
time probably to get into it.
Absolutely. You should get into it right now.
Yeah.
If you have 5 years, buy great stocks. You can buy great companies, at a price that is not indicative or reflective of their true value right now.
Now, I have my thoughts on this next question, and I have a feeling they're probably going to be similar to your thoughts. But you see on TV a lot of the advertisements about getting out of the stock market, buying gold, buying silver, buying, all that stuff. I'm just curious to know what your thought on that is.
Friends going to jump over a bridge, you're going to jump with them, Brian. I mean, that's what Mom would always say when I was a kid. You want to do something everybody else is doing, so they're going to jump over a bridge, you're going to jump with them. Yeah. That's it's a ridiculous statement, but it's also ridiculous to take all of your long-term serious money and to buy gold or to buy things that have an intrinsic value, but you're not going to give yourself an opportunity to make money in the long term. It's like buying a CD, right? Sure, CDs are safe, but with a CD, even a 5-year CD, you're going to make what, 1.25? That's if you have $100,000 to invest and leave alone for 5 years. I mean, that's crazy. I mean, once you factor in taxes and inflation, you've actually lost money, Brian. The only way to beat inflation and taxes is to invest in good solid equities and leave the money alone for a long period of time. Okay. It's the only way. There's no way.
Yeah. What are all the services that you provide for clients?
Well, gosh darn it. Do we have enough time? Well, the main services obviously are, true investment advisory services in the sense that first we help someone put together a viable plan and figure out, what this person's goals and needs are. That's the first thing we'll do. Secondly, we provide insurance services. We provide ancillary services as well, because we've developed relationships with different types of attorneys here in town, whether somebody needs a will, whether someone, needs some business advice from a legal aspect. We've got relationships there. We also have relationships with mortgage lenders, people that we trust and that we work with, because I've sat down with clients and realized that they were paying too high of an interest. They hadn't changed their interest rate, with their mortgage, or someone who might come in and they may have struggled with their credit or not understanding, how to manage their credit. We've got services here to help people to get themselves in a position to get a mortgage. I mean, so we provide, a very wide variety of different types of services. But the main one, though, Brian, is a person who is looking to one day retire, especially if you're within 10 years of retirement, and help you to put a plan together so that you can do that. And also, if someone has already retired or is close to retirement and they're looking for guaranteed lifetime income, we can help somebody figure out, how to create that scenario for themselves.
Okay, so that sounds attractive. So tell me more about that. The guaranteed lifetime income.
Well, first of all, most people don't understand that they already have one source of guaranteed lifetime income, and it's an annuity, and it's an annuity that's called Social Security. And most folks, when they hear the name or hear the word annuity, they think, oh my gosh, let me cross myself. That's a bad thing, but it's not. And all an annuity means is that you have a guaranteed stream of income, and there are ways to create, a private guaranteed stream of income with resources you've already saved up, whether it be in a 401k, whether it be in a 403b, whether it be an IRA. The key, though, is to try to find, a third-party insurer, that's A-rated, a place that the money's going to be safe, and try to figure out, what's going to be the best mix of different types of services attached to that. I mean, there's some annuities that have other things attached to them, such as long-term care riders and waivers and things like that. So it just depends. There's so many that I don't want to go on a tangent and go down a rabbit hole with that. But if somebody is interested, I'd love to have a chance to talk to them about creating more guaranteed income for them.
Yeah.
We do something we do here also is we do what's called Social Security planning. And that means that if someone is within, say, 5 or 6 years of Social Security, we can help them to figure out what is the best time to take it, the best way to take it, because this is something that's interesting. A lot of people don't really understand is that when you call the Social Security office, there's no one there that actually works on your behalf. You've got to already know what you want when you call there. If you call them up and you ask them for advice or help on how best to get your Social Security, that's not what they're there to do. They're there to just help you process your paperwork. So we help people actually do Social Security planning to figure out when's the best time to take it based on your marriage situation, based on whether if you were previously married to someone who had high income and you were married for at least 10 years, you can get their Social Security, or if your spouse, has a, higher income than you, or you have a higher income than them, depending upon, how your situation works out, we'll help you to figure out which one should take it when. It's not always best for you both to take your Social Security at the same time, especially if your ages are different, if your incomes are different. There are literally thousands of different permutations and ways to think about Social Security. But we have software, and we have more than 30 years of experience to try to help somebody figure out what you've saved up plus Social Security, how to make that money last for the rest of your life. And that's what we do here.
Interesting. So I'm not a big stock market person. I do have money in the stock market, and it just kind of sits and rides, and it's fed a little bit here and there. But I do also have personally more investments in real estate, and particularly in self-directed IRAs. And I'm just curious what advice you would offer anyone that might be less diversified in the stock market, such as myself, with real estate or self-directed. I'm just curious maybe how you would approach someone like that.
Yeah, I love real estate. As a matter of fact, again, it goes back to my whole idea about holistic planning, and that if someone is comfortable with real estate and they understand it, and they have an actual plan to help them to build wealth through real estate, I have no problem with that whatsoever. We also have relationships with third parties that do self-directed IRAs, and as you well know, you can put all different kinds of things inside of a self-directed IRA. I mean, it's a list there. So we have clients that do have some of their portfolio and other investments. We've helped clients use the self-directed IRA portal to actually invest in startups, smaller companies that are not even listed on the stock exchange. I mean, so that's not an impediment at all to working with us. Again, our main thing is to try to figure out how we can help you, because sometimes somebody will come in, and it's rare, but it happens from time to time. Either we don't click or we can't help you, but that's very rare. The main thing is to sit down with someone and try to figure out what is the plan.
Sure.
As long as I can work with somebody that actually wants to have a plan, then I'm comfortable. But if somebody comes in and wants to just throw money at a situation, I'm uncomfortable with that. And that's not someone that I'm looking for as a client. I want someone who wants cogent advice and wants some planning.
Sure. Yeah, absolutely. All right. So on a lighter note, what are you doing during the COVID not lockdown, so to speak, but social distancing? What's been your food vice? What's your go-to?
Well, I've been going on lots of really long walks around the neighborhood since we can't go in. I've been doing the push-up challenge. I've gotten a lot stronger, actually. So just hanging around the house, just doing things here locally. Not really going out. I mean, here's something. I've been reading, and I've started writing some books. I've started 2 different books. One is about investing for the investor, and one is about this business itself. Like I said, I've got almost 30 years of experience in this industry, and I get a lot of calls, Brian, other people that are in my business, that all over the country, that have questions about how I do what I do. And I've been very blessed to be considered a thought leader in our business. So I've done some things that I haven't really touched on that much that are unique to our business. So I'm going to probably write 2 different books while we're doing the Corona Madness thing.
Yeah.
So.
Yeah. The Corona Madness. That's a really good way to put it. I'm going to share my screen here for a second and show everybody your website. So let's see here. Okay. You see my screen?
Yeah, I did. Yeah.
Okay. So Social Security planning, and I'm just trying to see if there's anything else. Safe money solutions, income protections. Tell me about income protection. Is that more of the annuity that you were mentioning?
Income protection just has to do more with annuities. Also, it can just be money market funds. It could be anything that is going to allow a person to have a predictable stream of income. There was a saw that, many investment advisors have used. I've done it myself, and it's the 4% rule. And basically what it says is, if you have money in an IRA or in some type of investment account, you can safely take out about 4% per year, and it should last indefinitely. And, Brian, that's not anymore, because we're in such a very low interest rate environment that there have been many studies shown that the 4% rule does not hold up the way that it used to. And it's like most things in life. Everything works until it doesn't. And the 4% rule doesn't really work anymore. I mean, it's a good rule of thumb, but I would not stake my life, on using the 4% rule as a way to help someone deleverage, the money they've saved up in their retirement account. So it could be several different things. It could be one of many different things.
So at the end of the day, what really is important when it comes time to retire, it's cash flow, right? It's income. It's money coming into you so that way you can live.
Right. It's not about the pile of money, because I've known clients, Brian, that had millions of dollars in investments that were fairly illiquid and that did not pay very much of a dividend or interest, so therefore their income was not high. I mean, how sad would it be to have millions of dollars, quote unquote, saved up and still not be able to, meet your monthly expenses? So it's not about the pile of money you have. It's about the stream of income you have. And that's what we specialize in with people that are retired, is to help them increase their stream of income and also to make that money last their entire life.
Love it.
That's what we do.
Love it. Awesome. Okay, great. What else do you want? How would people reach you? They can go to your website, which is the jtdavisky.com, correct?
Yeah, websites, go to the website, give us a call. I have an executive assistant, Armin Hutchins. He's fantastic. And we've been actually morphing our business to do more things online. So been using Zoom and been using, the video chat model as far as talking to new clients. So we have no problem at all electronically doing that. So Armin will contact you if you are interested in talking to us, and she'll set up a time convenient to you to, speak with me by remote. So that's a great way of getting the ball started. Yeah.
Awesome. And just out of curiosity, so what would take place during that first consultation? Just kind of a Q&A, understanding what the client's needs or goals are, and going from there?
Yes, this is definitely a Q&A. I'll tell them, obviously a bit about, ourselves and what we do and the services that we offer. But then, most importantly, though, I want them to tell me how we can best help them. I think the best question you can ask someone when they come to your business is, how can I help you? How do you feel about your current situation? And that question normally opens up, a lot of dialogue on their part. And I think we pride ourselves too on the fact that we're great listeners. It's fun to talk about yourself, and you've had some successes, and you feel good about what you do. But the main thing that people need right now is someone to listen to them. And I think a lot of advisors miss that point. A lot of business people, period, miss that point when they're not listening to their customers. So we listen to what people are saying.
Great. Awesome. Johnathon, is there anything else that you would like anybody watching this to know about you, or anything else?
I think that's pretty much it, Brian. This is fantastic. I appreciate it. And go Cats.
Yeah, go Cats for sure. Well, listen, thanks for your time. You've got a wealth of information up in that head of yours. Your hair looks great, by the way. I know you asked me when you started out.
Thanks, sir.
But listen, if anybody has any questions or is curious to learn more about Johnathon, go to jtdavisky.com. And what's the best number to reach you, Johnathon? Putting you on the spot.
My personal cell, 859-608-6594.
Okay, awesome. Johnathon, thanks for your time, and let's hopefully we get through this coronavirus and we can get together and have dinner sometime.
Looking forward to it, man. Talk to you soon.
Hey, have a great day. See you.